The answer that I received in terms of how much is your agency worth wasn't what I was hoping for initially. 83% of agencies out there are less than million in revenue.
While you're scaling, what kind of pieces that you're putting in place to get to that like next revenue level?
We're 15 months in right now. We launched July 2024. It's easier to take a process that's already there, make modifications to it, than it is to build it from.
I'm curious, do you have any little secret questions you ask to try to gauge what kind of values the person has?
What does the entry look like? What does the exit look like? Because a lot of these aggregators, the entry is not so bad, but the exit is. The wildest thing that ever happened to my agency was I had a client, an elderly woman, that she was just leaving the grocery store one day and a bike hit the back of her car. She didn't think anything of it at the time. The guy was fine. But of course, 12 months later, she gets slapped with this $4.3 million lawsuit. And that's when I saw like the breakdown of how these lawsuits work. And it was, $40,000 in medical bills, $100,000 in loss of wages, and $4.1 million in pain and suffering expense. And it was like, Jesus. So yeah, that was the craziest thing. Everything got settled out all right in the end, but that was pretty crazy.
Wow.
So I'm Nathan Glass, and I'm with Utopia Risk in Sacramento, California, and I'm an insurance dude.
Boom! That is a big lawsuit.
Premature boom.
What's that?
I had a premature boom.
It happens. Yeah. That is wild, dude. That is a crazy amount of money.
It was. And, I keep it to this day so I can show people the breakdown of how, in California, you hear about these things. Right. And it's an entirely different thing to say, hey, this is an actual lawsuit. This is how it broke down. So, yeah, it's definitely a big talking point with clients.
Yeah. And those stories are solid gold. It's funny. I was just telling my team about that. One of my newer employees, team members, we're talking about the price issue out here in California, right? And it's like the price just keeps going up for all the insurance companies, and it's like everybody's like, I can't believe it. And it's like, well, this is what happens. Like your story is exactly like that. That is the story. I had to tell them of a story where a lawyer's kid got sued for over $1 million, for hitting a homeless person that threw himself in front of the car.
Right.
It was, you know what I mean? And the kid was a really upstanding kid that was the son of a lawyer. And he was getting sued by the parents of this homeless guy that was on drugs. But that is not the kid's fault. No. But we live in California. So.
Yep. It amazes me every single time I drive through Southern California, the number of "Are you injured?" billboards. It's, I was doing it a month ago, and I would say 75% of those billboards are you injured? Call us and we'll get you money.
Yeah. Do you ever see Sweet James?
Oh, yeah.
Oh, yeah. There are thousands of Sweet James all over because we'll go camping all the way up north. Yeah. There are thousands. Sweet James used to come into my work. I used to hang out with him here and there.
Oh, yeah.
Really cool dude. But really cool dude. I didn't even know who he was, and I didn't see the billboards until later.
Right.
Yeah. So crazy. Then his wife was on Real Housewives.
Oh, no way.
Oh.
Yeah. Yeah. And the only reason why I know that is because of my wife. Because I don't like those shows.
Right. Yeah.
So Nathan, how long had you been an agent when this happened?
So I've been an agent a few years. I got started in the insurance industry basically right out of college. And when I moved to California, I found a company that rhymes with Charmers. And so I worked for them for a while on the district level. And so I kind of got me, familiar with the insurance industry, and I was recruiting, training new agents. And then also there was a lot of essentially mergers and acquisitions that was going on there. So hey, this guy wants to retire. Well, let's bring on a new agent to acquire that book of business. And so that was my first few years. And then I had the opportunity to be the acquirer. So I bought my own agency about 9 years ago. And so I had that for 8 years before I ended up selling that last year and going the independent route.
Ooh, spicy,
Yeah.
because we got a lot of those lately, especially here in crazy California.
Yep.
You know Dan Ketajima?
Yep.
Yeah, he
My
did that
reputation. I've never met him, but
Right. Well, it's same company. I mean, from your
Right.
cryptic message, I kind of figured it out.
I think it rhymes with Charmers.
yeah.
Ours, the company that we're with rhymes with Ball Slate.
Oh, very nice.
You like that?
Also, Ball
Yeah.
State University.
You can't say their names because, well, we can't say our names because, I mean, who knows? They'll probably just take away the agency.
I could say
Right.
Farmers all I want.
Yeah, we can.
There
say.
you go. There you go.
Well, cool, man. I mean, that's so. I mean, that's a while. That must have been a hard transition mentally, especially after putting in that kind of time at that agency.
Yeah, it definitely was. And I mean, the time between the decision and letting my higher ups know, my manager know, hey, this is the route I want to go, and the time it actually happened was about 18 months. It took a while. So there was definitely preparation time. But as I was looking back at my experience there, and I wouldn't have changed it for the world. I mean, it helped me get really my foothold in where I wanted to go and cut my teeth there. But it was really early on in my career. I knew I wanted to make the jump eventually. I wasn't going to be a lifer with that company for, a multitude of reasons. But the transition, no matter what, is difficult. I mean, they're the company that I was familiar with. They developed me, and they provide such a good life for me and my family. And so to jump from this thing that I had built for years to something brand new from scratch, starting over, it's not an easy jump. And so that was definitely something that, it was difficult.
How did you sell it?
So, the way that Farmers goes about it is essentially the manager is the one kind of playing the game. So he's figuring out, all right, this person wants to sell, this person might want to buy, let's play matchmaker type of thing. So it's a very closed bubble, and you don't really have a ton of choice in the matter, unfortunately. And just because at the end of the day, it's corporate that's approving these, people that want to buy. And so people from the outside of the industry, even outside of the company, aren't necessarily the ones that they're going for. So by the time I sold, they were really looking at consolidation, trying to make fewer larger agencies. And so it was just a matter of who was within side of that district that was looking to buy at that time.
Crazy. So you sell it.
Yep.
Did you have a plan?
I did.
Like next step.
I mean, luckily I had some time, right? I had some time to plan it out, and I knew exactly what I wanted it to look like. But what you're not really prepared for, and even in my conversations with other people on the independent side of things, people that had made that transition before, it's an entirely different thing to go from something where they built the car for you. You're driving it. You can change the color. You can, do this little thing to the car, but essentially they built the car. You just got to go drive it. And to jump into something where you're building the car, you got to make your decision in terms of your agency management system, your CRM, what type of business you want to write. Am I going to be 100% commercial on personal lines? Am I going to do both? Where's the focus? And so the decision overwhelm, I think, was probably the biggest adjustment, especially early on. And timing is a little bit of everything as well, because I jumped into independent when it was really difficult to get carrier appointments. And so luckily I had found a good aggregator that has been amazing. They've been really supportive. And so I've been able to get some of the key carriers as a result of that relationship. But I mean, if I didn't, yikes, I would have been struggling to find carriers to even write with.
Is that like, when it comes to the aggregator, can you take your clients from the aggregator?
Yeah, and that was really one of the decision-making processes for selecting that aggregator was, what does the entry look like? What does the exit look like? Because a lot of these aggregators, the entry is not so bad, and it's not so bad as long as you're with them, but the exit is pretty ugly. And I was at a conference a couple of weeks ago, and I don't know if you're familiar with Carrie Wallace. She does a lot on valuations for independent PNC agencies. And she was just talking about things like the aggregator you're with, even your agency management system, because some of these agency management systems, they own the data. You don't own that data. And so if you want to take it off of their platform, you need to pay them. And so all of these things for the data you entered in, your clients, that was all the stuff that you entered in, but they own it.
That's criminal.
Sounds
Yeah, right.
And similar to something. I can't quite put my finger on it.
Yeah, exactly. But these things also have a massive impact on the valuation of the agency. And so one thing that was really important to us is we were evaluating which one was going to be the one we decided to go with, was what that exit looked like. And so we pay a small little fee to get it out, and that's it. It's all yours. That's it. And so I've been really happy with that decision. I think that was one of the better decisions that we made early on. And just because, you know what, they might be the right fit right now, maybe not in 5 years, 10 years, down the road. And so making that transition, that ability to move and be flexible in this industry, I think is really important.
100%.
That is wild. So it's not like a lot of folks diving in would be thinking, okay, I need to be clear on the aggregator. I need to be clear on the exit of the aggregator. But then I also, something that probably they just sneak in there is that data thing. I mean, I can't believe that.
Right? Yeah.
Wild.
It is. It
what
really
else
is.
Did you find that opened your eyes as you're doing this?
It's really easy to build it accidentally as opposed to build it on purpose, just because there are things that'll come your way. And if you take everything that comes in, all of a sudden you built something that you didn't necessarily intend to. And so just also knowing when to say no as opposed to just always saying yes. And it's really easy early days. All you're looking for is putting revenue on the books. It's really difficult to say no at that point in time, but it's also the most important time to say no, because saying yes, we were looking at this possible acquisition that was in the transportation space. And it was like, well, we don't do transportation right now. My business partner has a little bit of experience with it, but we don't have the systems and processes set up to facilitate a transportation book. So is now the time? No. Later down the road, when we bring on somebody that's more well-versed in transportation, sure, we can look at acquisitions in that space at that time. But right now, not so much.
It's fascinating in that world. It's so, there's so many different avenues you can go down. Right? Transportation. I mean, you could do cities and counties or whatever, right? All these different things that you can do. What are you looking at?
Yeah, we mainly work with contractors, restaurants, real estate investors, and manufacturing. So those are kind of the core four that we operate in. My business partner is fluent in Spanish. He's a native Spanish speaker. And so we have a really large and growing book of people, Spanish speakers. And so whether or not it's these guys, and they run amazing businesses, just this guy with 22 taquerias and sells $25 million worth of tacos a year. And it's just like, how in the world do you sell $25 million worth of tacos? It's insane. But yeah, that's really where we've had the experience and have those processes dialed in. And so we're really growing in those particular areas right now.
So you and your business partner started from scratch?
Yep. So we actually met back in the old days on the captive side of things, and we just always stayed in touch. And he went off and did his thing. I went off and did my thing. He likes to tell me that he saw the light before I did, so he moved on onto the independent side before I did. But he was working for somebody else. He was a producer for another firm that got bought out by private equity. And when they got bought out, he said, you know what, that's not the direction that I want to go. And it just so happened that I was starting something new. So we joined together and started this from scratch.
So did you guys both bring money, and what did you guys bring to the table, and talk about the scaling aspect of that? Were you guys the sales producers, or? Yep.
And so we really both brought some clients, a lot of referral partners, and he is very, very sales focused. He wants to be out in the field 24/7, 365. And so I complement that with a little more of the running the business, the operation side of things. So I get on the sales side as much as I can and sales and marketing. But yeah, we noticed we got along really well. We had always gotten along well. And then B, we had very complementary skill sets. And so it was just a really good match for us. And I think it was, I can't imagine doing this by myself at this point. It's just been so much fun doing it as a team and having the right complementary skill sets within the organization. So he heads up our Texas office in San Antonio, and then I'm here in Sacramento.
Oh, that's so cool. What was your first hire within the company? So it's you two, you're slaving away. What part, at what revenue did you guys decide to okay, this is our first hire, this is our second, and so on? Yeah.
So fairly early on, just because the service side of things is, it can bog you down really, really easily. Mm-hmm. And so that was our first hire. And then also fairly early on was also just a marketing assistant. And so it's one thing to produce the content. It's also, you got to get it edited, you got to get it uploaded. There's just all these little things that are time consuming. And so, it's where he thrives, where I thrive are actually the revenue producing activities. What can we do to make sure that anything that is not one of those items is being done somewhere else? And so it's always an evolving process. It's something we look at monthly, quarterly, where we say, okay, this is our process. And we evaluate our processes as well, saying, okay, maybe this is entirely broken. We do a lot in the E&S space. And so agency bill and premium financing and stuff like that. And we were just like, this sucks. I mean, it's time consuming. It's not fun, anything like that. And so we just completely changed that process where it took, probably anywhere from 30 minutes to an hour per client to where it's 5 minutes done. And so that sheer time savings, and that wasn't even an internal hire. That was, hey, the premium finance company can do X, Y, and Z. You hand them the stuff. They take care of everything else. We just got to make sure they did it right at the end of the day. So everything like that is something that is really important to us right now, and especially moving into the future, because it's not always going to be people that are taking over those processes. It's going to be automations. And the reality is that in order to, it's going to be almost like training a kid, right? So to teach my 5-year-old how to do something, I have to break it down very simply, step by step, because she's going to take it very literally. And that's going to be what our world is turning into from an automation point of view moving forward. So everything you're doing, if it's not done really step by step, literally easy to explain, easy to understand, then you're going to be missing the boat and you're going to have to redo everything at some point.
It's wild. The automation works really well for people that are very process oriented. The same people that were doing well when it wasn't automated, because they had, the checklist and the book inside the agency of like, this is the process, right? And now it's like automating that process, but man, it can get messy. If it goes in messy, it comes out messy.
Yeah, that it does.
Well, this is awesome. So what, like revenue, like what kind of scaling are we talking about, and how if somebody was getting into this and transitioning? The reason why I ask you this is because I think this is probably an unpopular. I'm probably going to say something, put my foot in my mouth, but I don't care these days. But there's probably a lot of captive agents that are going to eventually transition to independent, because eventually it just doesn't make sense. So like talk about like the revenue and like how while you're scaling, what kind of pieces that you're putting in place to get to that like next in revenue level.
Yeah. So, I mean, we're 15 months in right now. We launched July 2024. So we're still early days, and we just this month surpassed what took me 8 years to build on the captive side. And so it's gone really, really fast, and we've only accelerated over the past couple of months. And so we're going to be seeing some significant growth, and that's just organic growth. We are also growing acquisition wise as well. And so I know you had Brandon Wolf on from the PE perspective of acquisition, and where we're operating is really below that radar. So the 200,000, the 300,000, 400,000 range, where it's these, agency owners, sometimes an assistant, small team, but solid business. And there's really a breakdown. 83% of agencies out there are less than 1.25 million in revenue. And so there's so much opportunity from almost like a micro acquisition point of view, because, we've had 3 LOIs, so letter of intent, so offers accepted this year. We decided to back out of 2 of those because they did not pass due diligence. But at the same time, we're growing organically, but we're also growing via acquisition as well.
What are you looking for in those sizes? Like why did they fall out? Who do you use to go through that due diligence process? And
part of it is personal experience. It really helps being somebody that's run an agency for many years, so you kind of know what to look for and what not to look for. There was one recently where it was like, wait a minute, these financials don't look right. Why don't they look right? Well, it's because premium payments was in the operating account, and so they were one account, and it was like, yeah, we're out. So he's probably doing everything right and everything above board, but it was something where it was a little too messy for us to move forward with, unfortunately. But there are brokerage websites out there that we sometimes use to get into these conversations. But also, and it's hard because I've been there, I've done the exit. The answer that I received in terms of how much is your agency worth wasn't what I was hoping for initially. But you know what? That is what it is. It was worth what it was worth, and I accepted that and moved on. but not everybody's willing to. One of the first ones that we looked at that we decided to back out of at the end of the day, they were just asking and very firm-footed in terms of this is what we think it's worth. And it was more than 5 times revenue. And we just did not see how it could be worth more than 5 times revenue given where it was and the parameters around it. And so sometimes it's just valuation clashing. Sometimes it's financial. But when it really works out, we find that there's really good personality fit. For us, being really commercial focused, it's either heavy commercial or 100% commercial. And not that we can't, because the more and more agencies I talk to, the number of people that are even in their mid-70s that tell me, I have no idea what my clients look like because I haven't seen them in decades. It's a very remote agency oftentimes. So it's not like we can't operate in too many other states, but there's just so much opportunity in California and Texas where we already have offices. That's really where we focus.
Yeah, I would think the agent force is growing older,
yeah.
right? And there's all of these books that are just coming up where they've just held on to them.
Yep, exactly. Yep.
So you said times revenue. I'd been under the impression in the independent space that they looked at EBITDA. Is that
oftentimes what I've noticed is that when they're below $1 million, especially below 500,000, it's an owner operated. They're kind of taking whatever is not a core expense, and so they operate more on a times revenue. And as you grow the business, there starts to be more business profit as opposed to just, hey, there was an extra 10 grand this month. I took 10 grand, then they start to switch that conversation over to EBITDA.
And what is that multiple? Like, what is your sweet spot? Like, what are you looking for if you were selling, and what are you looking for when you're buying? Yeah,
a lot of the stuff we're looking at is between 2 and 3. That's where we notice that it works best for us. Private equity is an entirely different math equation. They're playing different math than we are. We're looking at, all right, can this support the debt service and the expenses? They're saying, as Brandon said, they're trying to get money off the table. So how much can we get off the table? So they're looking at it from end valuation point of view. We're looking at it from, all right, can this business actually sustain the expenses that it's going to incur with the current expenses plus a debt load? So we notice usually in the 2 to 3 space is what we come across the most.
Gotcha.
That's awesome.
Interesting.
Yeah.
Did you guys move into Texas because of your partner, or?
Right. Yep.
Okay.
So we met when he was in Sacramento, and then he shipped out of here in 2020, and so he's been in San Antonio. And like I said, we just stayed in touch, and he comes here, I go there. But yeah, it was a marriage of convenience that has worked out very, very well.
I didn't know if it was for premium, because premium out there is insane.
Right? Yeah, it is. It really is.
We have a lot of clients out there, and it's like, I mean, the numbers compared, it's like bananas crazy.
It is. Like when I used to be on the captive side and they would classify California as a mid-premium state, I'm like, what are you talking about? Our premiums are crazy. And then you talk to somebody from Texas, like somebody from Houston, it's like, our homeowners premiums are 10 grand for this, 2,000 square foot house. I was like, what are you talking about? So
it's insane.
It's nuts.
Yeah. Texas, Colorado, Georgia.
Yep. Crazy.
Places to do home.
So you said that you were able to do in basically 1.5 years what you were able to do in 8 years. What contributed to that?
A lot of it was where we're playing. So on the captive side of things, I was really personal lines. I didn't really delve too much into the commercial side of things. And just the way they were they were approaching things with commission reductions and everything like that. Significant premium increases. It became difficult to really grow at a significant pace. And so where we operate right now is usually in the mid-market size on the commercial side of things. So, it used to take 10 to 20 clients before to what is one client now. So that obviously just accelerates that growth when you're talking far fewer numbers in terms of clients.
Do you, when you sell commercial, do you downsell personal lines as well?
Not right now. Part of that was because of when I made that transition. Nobody was accepting new appointments on the personal line side of things. And so it was partially, hey, I was ready for a little bit of a break. And like I mentioned, wanted to intentionally grow the commercial side. So that was the big priority. But the other part of it was really the fact that nobody wanted to write it at that point in time. So, I mean, I think Travelers still, for many, many agents, has a 2 households a month cap. And it's just like, okay, you're not going to be growing your personal lines book too quickly at 2 policies a month, 2 households a month. So there's that part as well. But as that starts to open up, that is going to be another opportunity for us to add something that we're familiar with. We have the processes. We can just plug and play there.
100%. What about financial services?
My partner came from the banking side of things. I spent a little bit of time exploring the financial services side, and it's not something that we have even considered moving into. We've just really had a really good core and really want to develop this side of things, because we see our approach is really prevention first. That's the first and foremost. And so when we go into a client, we're not talking about insurance. We're not talking about the protection side of things. We go prevent, then protect. And so for the way that we're building things out, the needs that we're seeing and the conversations we're having, we're basically at capacity with just the commercial. And so when we look at adding something like a personal lines or venturing into transportation side of things or financial services, the way that we look at it is not going to be, hey, we're going to start this from the ground up again. It's going to be via acquisition. And because that 0 to 1, that those building out of those processes, it's very time consuming. And so, there's this analogy that a short flight, 10 to 20% of an airplane's fuel is spent in that takeoff process. And so as we look at adding other niches, other lines of business entirely, it's going to be through acquisition, because we avoid that 0 to 1 problem. It's easier to take a process that's already there, make modifications to it, than it is to build it from scratch 9 times out of 10.
Yeah. And you may get the people too.
Yeah, exactly. I mean, you're not just acquiring the processes, there's the people. So hopefully some service, some sales, maybe even some marketing. And so it just becomes a much easier proposition.
Yeah.
If you started from scratch today, would you start by acquiring rather than starting?
Yeah, if the opportunity arose, absolutely. And I think for my background, what I've seen, especially if you have the experience, if you're making that transition from captive to independent, and you have the ability and the opportunity to acquire into that transition, 100%. And there's just, if nothing else, You're used to making a decent income here. All of a sudden, income dries up a little bit when you're started with zero, right? And so you got to build into that. So if nothing else besides that, but there are so many more doors open when you bump into that amount of revenue. So if you have an extra $2,000, $5,000, whatever at the end of the month after you pay yourself, and you get to spend that on a new staff member or marketing or whatever, you have so many more choices, so many more possibilities to really accelerate that growth from there.
Makes sense.
I was going to comment on the financial services, because right when he said it, I saw your face just was like, like the typical PNC, when you came from that world, it's like, right? And it's like, it is interesting. You left where there was a lot of control to where there's a lot of independence, right? And I think all that does is add some handcuffs when you have,
right.
There's just more regulation, more things to be concerned about, more paperwork.
Yeah, absolutely. And, I had even explored that route. And there's a friend of mine who had a firm. He was, the certified financial planner. And I actually did a lot of guest speaking for his classes because he kind of had a very interesting niche, and he was looking at moving on to something else. He was done with financial planning. And so we had talked about me going that direction a little bit. And I think it's very, very appealing to me on a personal level. But I also see some of the things that are happening in our industry happening in that industry, with consolidation, with, even fee compression, as they put it. And the model that I would want to have in the financial services, it wasn't his model. For me, the way that I operate is more the consulting fee, the fee as opposed to the fee based or the commission for assets under management. And so, it's a very, I talked about kind of the fit on the acquisition side of things, making sure it fits the direction you want to go. And when I was looking at that particular opportunity, it wasn't the right fit for how I wanted to grow the business. And so it was best to just say, you know what, that's not the right opportunity. But that's not to say that we're not going to come across an opportunity that is that model, and we can plug and play that model.
How are you acquiring these smaller companies? Are you guys reaching out individually? Because I know I've gotten letters in the mail, like I think that stuff works, like the guerrilla marketing side of it.
Yeah. I mean, that's definitely part of it. There are brokers out there. I have really gotten ingrained in the M&A community. And what's really interesting is everybody around me, nobody does insurance. Everybody, I got tons of people interested in home services, your plumbers, your electricians, stuff like that. Some people focused on larger construction companies. I got a guy that is buying a hospital. I got another guy that wants to buy an insurance carrier. So if you know any carriers for sale, let me know.
Wow.
Right. And so what I've just noticed is they're always out looking. They have their finger on the pulse, and there are so many agents out there. And a lot of times it's just a matter of, hey, this guy over here, he was having a conversation. This networking event, he ran into somebody in his 70s that is, an independent agent. And hey, he might be looking to move on. And so it kind of happens all over the board. But yeah, sometimes it's just reaching out, cold outreach. You know what? It's I don't usually contact the people that are in their 30s and 40s and even 50s, because that's not I mean, I wouldn't if I were somebody that's even in my 50s looking to move on, because if you build it right, it's really a great thing that you can continue to do. I was talking to a guy a couple of weeks ago, 78 years old, finally ready to hang it up. It's 78. And we were meeting with him, and he's like, you know what, I might still keep the office just as a place to get away from my wife occasionally. And it's like,
hey, smart man.
Right? They only $800 a month. That's worth it. So, you know, so yeah, it's all over the place.
That's funny.
You're right,
dude. I'm all over the place. But back to like the acquisition side of stuff, you were talking about 2 to 3 times is what you spend. What are banks looking at as like? Are they looking at that 2 to 3 times and going, you know what, this is a great deal. I will finance X amount.
Yeah, a lot of times they like to see their ideal structure, if you will, is they like to finance 80% of it. And so in that 2 to 3 range, they're usually okay financing 80% of it. Another 10% coming from the buyer, and they normally like to see about a 10% earn out. So just making sure, especially in the commercial space, a lot of times there are some larger clients that make up a larger portion of the book. And so just a little bit of incentive to make sure that the seller is at least massaging that relationship over the, you know, next 1 to 2 years to make sure that those clients continue. So that's where I see most lenders really, really comfortable. Obviously on the lower end, they're, you know, sometimes that number bumps up in terms of not 80%, but 90, 95%. But that's a typical lender. There are other ways of financing these things sometimes, but I haven't seen, you know, my friends outside of the insurance industry and M&A, they do all sorts of crazy stuff. It's like, you know what, that's really cool. You guys get to do that. I don't see that flying in. I've never seen it fly in any of the deals that we've done.
Right. So you're saying out of pocket agents looking at 20%.
Right. Minimum. Yep. And normally you can get that down 10, sometimes even 5% if there's the more concentrated the top 10 clients, the more it starts to make sense that an earnout is included in there, just because the seller understands, okay, all right, this is $200,000 in revenue, but $50,000 comes from the top 10 clients. Well, I understand 5 of those top 10 go away. This drops down significant for you. So they understand it, they comprehend it. A lot of them are okay with that. So you're not normally thinking, all right, I got to come up with $500,000 out of pocket or what have you. Even $200,000, sometimes you don't need to really come out of pocket with that, especially on these smaller ones.
Probably depends on the bank too.
Yeah.
Do you find the sellers more do they want to make sure that the buyers are legit because of those kind of situations? Yeah.
And for us, the more we can establish that relationship with the seller, really the better. I mean, whenever possible, we go and meet with them in person, just because you know, Zoom is great. It's fantastic. So at least I can see you're a real person, hopefully. But it's another thing, especially in older generations, it's a totally different thing to sit down and whether or not it's coffee or lunch or just at the office and have that conversation, because you start to get a feel for who they are as a person and they get to get a feel for who we are as people. Because you know what? It's especially in these situations where there's earnouts. You know, we were talking to a gentleman earlier this summer that he got burned. He did the earnout and he got some money up front, but he was doing a pretty hefty earnout. And you know what? They said, sorry, we're not going to pay you. And he had to take him to court and get that money as much as he could. But at the end of the day, he couldn't get all of it. And so he had to make sure that his non-compete was broken, because otherwise he was stuck and he didn't have any other options. And so he had to make sure he could break that non-compete, get his clients back, reestablish himself in the industry. And so there's stories like that out there of people getting burned 100%. And that's why for us, the relationship, not only from us to them, but them to us is so important because first of all, if we're going to acquire somebody, we want to make sure that they're not trying to pull one over on us, sell it to us, establish something new, grab all the clients, resell that, but also that there's that trust established that, okay, if there is an earnout, especially that you guys, you know how to run this thing. So you're going to take care of the clients. You're going to make sure that the revenue stays on. And so that earnout is going to be possible. But also that you're going to pay it at the end of the day, because it can be a gamble. And you know what the reality is, not everybody is gonna come through with their word at the end of the day. It's important to do everything you can up front to make sure that you vetted them.
So you've had plenty of these meetings now at this point, I think, right? Or at least a fair amount.
Yeah.
I'm curious, do you have any like little secret questions you ask to try to gauge what kind of values the person has and be able to, can I trust this person? Right?
Right. A lot of it, when we're just chatting about other things. I mean, it's not even necessarily the conversations around the business or about insurance or anything like that, but you get to understand somebody when you start to hear about, everything outside of the business. And then when it comes to the business side, there's little things about, all right, really get them to expand on what they're doing after the fact. And so there was one that we backed out of after that initial conversation, just because he was very clear that it was going to be tight after he sold the agency. And so he's probably going to have to go back and work, and he doesn't know anything besides insurance. So he's going to go back and work in insurance. And there was just this, it was rubbing us the wrong way in terms of how he was approaching it. And so I don't have a magic question. I wish I did. Yeah. I'll keep on working on it. But I think it's like, as you get to know a client, when you get to know that client, you get to understand them, their situation, and you can kind of gauge early on, okay, is this going to be a good client? Is this going to be a client with a lot of claims? Is this going to be a client that never pays their bills? All those things you can normally have a hunch about early on. And, part of it's probably a little bit of repetition in those situations, but also we're all people that just build relationships for a business. And so we're pretty good at tuning into people most of the time.
Yeah, that's great.
Are you bullish on California? Because, dude, our commissioner is nuts out here. Did you hear about the misappropriating funds? Yeah, all that stuff.
Yeah.
Then our governor, right? Like this is just bananas. So, what do you feel about, since you're in California and Texas? What do you feel like about California?
I've had conversations on both ends of the spectrum, and it's really, really difficult to understand what direction it's going to go. And I think they need to come to the table, have a heart-to-heart, and talk about what the reality is. Because the reality is, the carrier's exit, what does that do to the insurance market? It tanks the insurance market. Everything's going E&S. A lot of it on the home side of things is already heading that direction. More things on the commercial side are heading that direction. And there's more flexibility in the E&S market. But also with that comes a lot more cost. And so we're just, in my opinion, this really interesting inflection point. And I just really, really hope that the powers that be and the right people are at the table having right, honest conversations about what it's going to take. And as I've been talking to carriers over the past 12 months, they're more optimistic about the direction things are going. But then again, general liability is seeing an overall, combined ratio well into the 120s. Workers' comp is starting to become a hard market again. And homeowners was heading in the right direction. And we had the Palisade fires. And so that kind of changed that conversation. So it's really difficult to see. And what I've been telling so many clients is historically things have been this way. But I think we're in uncharted territory, which is very unnerving to be in. But also there are so many businesses, so many families that rely on our guidance. And so, like you staying on top of things, what is happening, it's really important because everybody else needs our guidance. We really need to make sure that we're an advocate for them at the end of the day.
100%. Yeah, and it's almost like, it's like one of those things, like when things are difficult, like the obstacle is the way, right? Like, so it's like when things are difficult, I like being in difficult situations because it makes most people crumble. So your competition is less, you have less competition. But then again, the future of it gets a little scary. But I don't know, man. Some crazy stuff happened. If you're a part of a captive, you get hosed, right?
Right.
When you're independent in these kind of situations, it's a different story. So cool, man. Like, final question for you. Thank you. Thank you so much for not like just crazy knowledge and information. And I love that you made this leap and you're just, it's like what you were able to do in a year and a half is so cool. What are you really excited about in this next year? With technology, the business in general, what do you see is like, this is our homing beacon?
You can't say ChatGPT 6.
No. You kind of mentioned when you were talking about those difficult situations and what that does. And so for me, whether or not it's the insurance marketplace or with AI, there's such a significant change that we're going to be going through over the next 1, 2, 5 years. I was at a presentation where somebody laid out what they think is going to happen with AI over the next 5 years. I was like, that is mind blowing. And he's like, we're probably being conservative with that time estimate. But at the same time, that breeds obstacles, which breeds opportunity. And so whether or not it's on that side of things, or we really just see a massive opportunity to provide a really good option for those that are looking to exit, move on, in the insurance world from an M&A point of view. There's just so much uncertainty, but at the same time that breeds opportunity, and super excited about it.
That's awesome. Nathan, thank you so much.
Thanks for having me.
Your services, how can people get a hold of you?
Yeah, check us out, utopiarisk.com. Find me on LinkedIn, and happy to connect.
Awesome. Thank you, Nathan.
Yeah, thanks, guys.
Appreciate it, man.